from the forex and the shares trading, or not really?
No, they are different. Forex being a different asset class, it is derived from interest rate. Interest rate is based on inflation, and inflation is calculated on consumer price index.
Yep.
So the flow is consumer price index, which is CPI, then goes to inflation, then goes to interest rate, then goes to foreign exchange rate. On the other hand, share trading, which is a different asset class, shares is a different asset class, and it is derived from management quality, then product quality, and then service quality. So that is why they are different, and that is why we'll be starting the forex trading under instruction based discussions through basics of trading, and we'll start with module 1 and unit 1. After you have gone through the general financial product advice, which is in front of you, then we will go to the next. You already know the copyright, so you have to ask support team. Introduction to foreign exchange market. Foreign exchange market is also known as Forex or FX or currency market. So it is having 4 names: Forex, FX, currency, foreign exchange. The daily turnover of this market when the book was written way back in 2013 was 5.3 trillion. Now it is 7 trillion. We need to remember 1 trillion is equal to 1000 billion, and 1 billion is equal to 1000 million. So very, 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 very big. Compared to this of $7 trillion US in per day, the daily turnover of ASX would be around 75 billion. Very, very tiny. Very, very tiny. Yeah.
Okay.
Forex can be considered as a form of exchange where the global decentralized trading takes place for various international currencies. Global decentralized international currencies. Although the exchange name is there in foreign exchange, no exchange is there physically present which is controlling the foreign exchange. That is why it is decentralized. Exchange here, exchange means bartering. BARTER. We are exchanging. Yeah.
Yep.
There are 4 kinds of trading can be done through forex. One is the spot, which we'll be doing. The other one is outright futures, which you won't be doing. Swaps, which I'll explain you what is that. Option, which you won't be doing. Options for futures and spot, they all are the spot in the form of CFD, contract for difference. They all are derived from the interest rate, from the underlying instruments. That is why they are known as CFD or options. So they are all derivatives. So in Australia, CFD is measured in derivative trading. In America, options is the major one.
Okay.
And that derivative in the form of CFD, contract for difference, will be trading on spot. What is spot? We'll explain you later on. If you see the growth of spot market from, this is USD billion, from 500 billion to 2000 billion in 13 years. Now it has gone up to 4,000 billion. That means 4 trillion. The growth of spot market is humongous. And that is why we'll be trading spot market through CFDs. International trade and investment, the main function is to facilitate international trade and investment through currency conversion. For example, if an Australian business house, for example, BHP, you know BHP?
Yep.
Wants to import goods from Germany. You know Siemens, Germany company?
Yep.
If it needs to pay the vendor, that is Siemens, in euro, even though its own income is in Australian dollars. Supposing the BHP, the machine is costing 100,000 euro, 100,000 euro. So BHP has to sell 1,078,052 Australian dollar to get 100,000 euro to pay Siemens. Make sense?
Yep.
So this is a humongous amount. So that what consisted of 7 trillion. You understand?
Yep.
So that is what it is, extremely big. Now, after understanding the little bit of decentralized nature and the mammoth value of this, we'll go to timing. Timing we'll consider from GMT 0 to 20, 0, that means 0 to 0, that means 0, 1, 2, 3, 4 to 24. And GMT means Greenwich Mean Time. We are actually GMT plus 10 in Australia actually, GMT plus 10. So this is bank opening time. So when GMT is 0, that means we are Australia is 10 a.m. So around that time banks open, and then first actually New Zealand opens, and then Australia, and then Japan, and then India, China, Korea, Russia, all those things. So the banks will be generally open from GMT 0 to 9 or 9:30 in Australia. After that, at around 6:30, yeah, Europe will open, and GMT London is GMT plus 1. So when it is 8 o'clock, London will be 9 o'clock, and Europe will open. So we have a Australia and Europe will have a very little overlapping in time. But Europe and America opens at around 11:30 our time now in winter. I think 12:30, I believe. Yeah. So yeah, 12:30 here, 12:30. And Europe and America would be having a bigger time overlapping, and this is known as nylon. NY from America and LON from London. Nylon time. So this time is can be important for intraday, but we are not starting intraday. We are starting the basics of trading, and we'll be going through foundation beginners for a daily 2 day time frame, advanced for 12 hour, and professionals for 4 hour. Any question?
Nope.
Generally, they say 24 hours a day, 5 days a week. A very need to exchange currencies. The main reason to know why this market is the largest and most liquid in financial market. As you saw, this market is open 22 hours. You could have asked this question: why there is no color here? Because last 2 hours, all the banks across the globe are closed. No one is opening now at this time. That means the banks or their partner organization or financial institutions and the brokers are doing reconciliation of their books. That is why you cannot place trade from 7 to 9 Melbourne time, 7 a.m. to 9 a.m. This is what it is here. Make sense?
Yep.
So that is why we say it is 22 hours a day, 5.5 days, because in Middle East, the banks are open on Saturday, Sunday, and they are closed on Thursday, Friday. So that is why, because the entire Middle East, probably in Dubai, and then Bahrain, and then all those countries, Iran, Iraq, Saudi Arabia, are trading on Saturday, Sunday. That is why you can see a small bar, Sunday bar. We call it Sunday bar. Well, we don't trade because that spread can be very big. Commission can be very big, and we'll talk about spread and commission later on. But at the same time, Forex market never sleeps, which means you can participate in the market except those 2 hours in 5 days. Okay.
Yep.
I told you I'll be telling you what is spot market. Spot market is the most popular way in which Forex is traded, known as spot. The currencies in the spot market are traded and bought and sold according to the current market price. The spot market, also known as different names, for example, cash market or physical market. Why cash market or physical market? Because in earlier days, when there was no computer, there was no telephone, nothing, people used to gather in a pit, P-I-T, and they shout at the top of their voice or write their orders here. And the orders, if it is matched between by bid and ask, they will be actually executed by the officials. So have you seen any pit physically or in motion or in TV?
Only on videos.
So now with the advent of computers, all the pits have died except one in Chicago. Chicago Mercantile Exchange is still having pit, and old men who are aged between 80, 70 and 85, who are not very computer proficient, but they are very good traders. They come and still do this way.
Okay.
So that is very physical. And cash, because it is extremely liquid, you can encash your position within fractions of second. So that is why it is also known as cash market. Okay.
Yep.
Any question?
Nope.
Now, factors influencing demand and supply. The price of any currency is determined by its demand and supply. Why currency? If I ask you, if there is a flood in Queensland, what will happen to the price of banana?
Go up.
go up. And if there are too much of banana, then what will happen?
Go down.
That's it. So now replace banana with euro. Same thing, same thing, same thing. If people are demanding euro, dollar, euro will go up. If the people are supplying, that means selling euro dollar, that means the price will go down. But for banana, it was Mother Nature, flood, main reason. But the main factors which can influence demand and supply for foreign currencies are as below. Countries' cash interest rate. As I told you, cash interest rate is foreign exchange is derived from the cash interest rate, which is derived from inflation. And if you ask me, the single most job of Reserve Bank governor of any country is to control the inflation.
Yep.
Gross domestic product, GDP of the country, is the revenue of the country, of revenue of any country. Employment, unemployment, specifically the non-farm payroll, all of these you can find it in Forex factory, which you are familiarized with, isn't it?
Yep.
So non-farm payroll is the one, non-farm payroll is the one which is very important on the employment, unemployment. So non-farm employment change, which is the change in the number of employed people during the previous month, excluding the farming industry. So this non-farm employment change, which comes under employment, unemployment, is the single most important in employment and unemployment because it is coming from United States. And you can see that previous was 147, and this means it is revised. It is revised from 177. And the forecast by the economist was 126, but the actual came as 139. If you see the graph here, so many people lost job in COVID. Yeah, 20 million people lost job in COVID. But if you compare this with global financial crisis, in global, this is for only 1 or 2 months in COVID, and then economy started adding. But in this fellow, in global financial crisis, so many months from this month, which is February 2008, till this point, which is March 2010, for 2 years, people lost, so many people lost every month job. Okay.
Yep.
Economic performance, trade balance is important. Trade balance specifically for the commodity producing countries like Australia, Canada, Japan. What is trade balance? Trade balance is also known as current account deficit or account balance, and it is nothing but the difference between the import and export. That is why the tariff game is on.
Yep.
That is why the tariff game is on, and we have captured that with tariff or without tariff, doesn't matter. With tariff or without tariff, market knows it all much in advance. Market knows it all much in advance. So we don't have to care what the hell is going on tariff, but because market is doing everything, market knows it all. Yeah.
Yep.
Tariff came here, but market knows it from here.
Yes. Okay.
And that is why dollar index went down and euro went up, and this fellow went up from here at this point, February. And so it is important, extremely important, so to know all these things. For this fellow is good. Which is Forex factory. But the other one is also very good, which will help you to understand the market perception of future growth of one currency. Everything you will get in this what is that, Forex factory. The one thing which you will not get is the market perception. The only market perception is being created by the Reserve Bank governor. So you need to go and read what the Reserve Bank governor is speaking, if any time. Like ECB is European Commercial Bank, Bank of Canada, and then GDP, quarter on quarter, gross domestic product, this fellow. BOJ, Bank of Japan. Bank of Japan governor, Udo speaks. Fed means Reserve Bank of America. They are known as Federation, FOMC, Federal Open Market Committee. Fed chairman Powell speaks. If you want to know what is exactly what is the perception, if Powell is very dovish, then the market will go down. If he is very hawkish, then market will go up. And if you want to know what he is talking about, you can go and read.
Yep.
To know the perception. But you can read these thousands, millions of things which is available in internet. But otherwise, you can read only one chart. So reading one chart is much. This will give you the news of millions of channels, Reuters, CNBC, Bloomberg, and so on and so forth. Okay.
Yep.
The other one which can create give you good idea is trading economics. I don't know whether I told you already or not. Have I?
Yep. Yep.
So you need to study trading economics. If you are missing something on the forex factory, you can go and reach on the indicators, inflation or something like that, interest rate, inflation, all these things, and also in terms of forex factory. So there are talks which are going on. So we thought also we should capture some consumer price index CPI, as I told you, for all which CPI is leads to inflation, leads to interest rate, leads to foreign exchange rate. For all urban consumers, all items in the United States city average during the 2010, during the global financial crisis 2008 to 2010, the CPI went very down, and during COVID it came very close to zero. But now we are quite at 2.5% CPI. And then you can see the history. If it is goes below the zero, then we'll have a downturn, especially in the stock market. In the consumer price index for all urban consumers purchasing power, PPI, purchasing power, PPI of consumer dollar in United States city average. So during the Great Recession, during the Great Depression of the 1930, it went down crazy. It went down crazy to -10, and then again on 939, 38, and then again on 950, and now we are here. Now we are here. If it is going down, we don't know. If it is going down, 1 divided by CPI, 1 divided by CPI. If it is going down, then we'll have depression. We know. We don't know. We don't know. We don't know. Make sense?
Yep.
Any question?
Nope.
Chinese yuan, because China is number one almost now in GDP. Not almost, it is actually GDP. To GDP, GDP wise, China is one, United States two, and India is three. So the Chinese yuan, which is a restricted currency, is not floated. Till then, it had the highest at the during the COVID. During the COVID, it was highest around 7.2, and then it came down. Before inflation, it went to 7.2 to 6.2, 6.3, and after inflation, it again went to 7.2. Now it is at the same point. So this can be telling us something. World GDP share in 2012 when the book was written. I don't know what was that. United States was 19.1 of the total 100% of the GDP in the across globe. China was 14.3, and Europe was 14.2, India 5.7, Australia 1.2. And then per capita. Per capita means you take this total dollar GDP value divided by the population, total population. You get 48,387 average people contributing to the GDP. Australia was second, 40,000. But that was in 2012. Now in 2023, Australia is 10th, Luxembourg is first, Ireland second, Norway, Switzerland, Singapore, Qatar, United States is 7. Even Qatar per capita income is more than United States. Singapore is more, Ireland is more, Luxembourg is the highest, 132.37. Of course, because of their low population, that is also there. And now, 2024. As I was telling you, China is now at 33.1 trillion. China has been the largest economy in the world since 2014. Now US is 29.2 trillion and India is 16 trillion. So these three are very big. Brazil, Russia is there. Any question?
Nope.
So this is BRICS. South Africa 994. Brazil, Russia, India, China, and South Africa. And this is other, and this is G7. Germany, Japan, Italy, Canada, United States, UK, and France. There are three types of market participants. As mentioned earlier, participants in this market are simply looking to exchange their own currency with another foreign currency. So whenever you are going to your own country, which country you are from, Ahmed?
Afghanistan.
Afghanistan. So what is the currency there?
It's Afghani rupee.
Afghani rupee. So you have to convert Australian dollar to Afghani rupee, isn't it?
Yep.
Same thing. If I have to go to India, then I have to convert Australian dollar to Indian. If we go to Europe, we have to convert Australian dollar. That is how we also participate in the foreign currency. Forex market participants can be subdivided into three categories: investor, trader, and speculators. Do you know these investors?
I know Warren Buffett.
Yeah.
And I don't know the other guy.
George Soros. So both this is the guru of share market. This is the guru in forex market. Very, very big billion-dollar hedge fund managers. Yeah.
Yep.
So investor, they are investor because they are having long-term view, 10 years, 30 years, 20 years. Then in mutual fund managers, hedge fund managers, so they are having short-term, like for example, medium term. For example, 6 months, 1 year. Then we come speculators. We don't have any view. We see what the investor is doing in the chart. We see what the hedge fund manager is doing on the chart. Then we try to do it the same way. We try to go in the same direction. Investor and trader are going. If they're going long, we'll go long. If they're going short, we'll go short. Make sense?
Yep.
Any question?
Nope.
When we started in 2012, the speculator was 7%. Now it is 13%. It has grown double.
Okay.
We doubled. We now retail traders have doubled. Make sense?
So are we considered speculators?
Yeah. Speculation is not gambling. Speculation is finding out what the investor and traders are doing and go through it. That is why we have in the recent one, we have written the difference between, trading is just gambling with extra steps. No, we said no. Because in gambling, the odds are always stacked in favor of the house. In trading, through proper trader training, that's what you are doing. You can stack the probabilities in your favor for sure. 80% or 70%, whatever. You have already proven to yourself, which is fantastic in share trading. Question?
Nope.
Currency markets, currency traders. A large portion of the market is also consisted of currency traders like us who are taking advantage of the small fluctuations in the exchange rate. There are new now we are able to trade these instruments the power of leverage, which can be 1:30, 50, 100, 200, 300, 400, 500. What is leverage? Leverage can be considered as a loan provided to an investor by his brokerage firm. That is why we have told you to go and open a leveraged account in one of our because as we are one of the trusted and oldest. They are also one of the oldest and most trusted, and the form of Go Market. I hope you have an account with them. Yeah.
Yep.
Leverage. To take advantage of leverage, a trader needs to open a margin account with a forex broker. That's what you have done with Go Markets. Leverage can rise from 1:30, 50, 100, 200, 400. Leverage is required to be able to trade on for 100%. With 1% margin and leverage, they are very very close, very concept wise, they're just the opposite. So 1% margin means 1 divided by 100. To be able to handle 10,000 of currency, you need to invest only $100 because 100 multiplied by the leverage, which is 100. So in that case, 100 multiplied by 100 will be 10,000. So you'll be using 1%. Now in Australia, thanks to ASIC, they have reduced it to 1:30. Okay.
Yep.
So once upon a time, the great scientist said, Archimedes, give me a lever long enough and place a stand and I will move the entire earth. No one gave him the lever, not the place. He could not move the earth. Otherwise, I could have been in some other place. He could have been in Mars. I could have been in moon somewhere. If you want any introduction to metadata, you can click here and then learn. Any question?
Nope.
But it is very powerful. This sentence is very powerful, meaningful. We in foreign exchange market, one way to think, we are always involved in the foreign exchange market to identify moment we travel overseas, as I told you, to a foreign country for leisure or work. There we need to exchange our own money into the foreign currency. So this way we participated in the foreign exchange market, although in a very small way. Another way, the more popular way, is to participate in forex trading through a broker or dealer. That's what you're doing. Yeah.
Yep.
Trading in forex. Trading in forex is to participate in trading between one country's currency with another. For example, as I told you, Europe, the common currency is circulated in Euro, but in United States it is USD. So in this case, an example of forex trade can be to buy or sell. We only do one. Either we buy in the background someone is selling. We don't know. When we sell, someone is buying USD. So, but we do only one part. The broker takes the other part. This is known as going long if we are buying, or short for if we are going sell for Euro USD. Now we completed basics of trading. We learned a lot of about the timing. We know a lot about the decentralized nature of the market, and we know a lot about the spot market. And I'll talk about swaps later on. Futures and options we don't trade. We talked about the $7 trillion, very big. We talked about the time. We talked about the number of days. We talked about the physical market or cash market, that is spot market. We talked about very important concept of cash interest rate, GDP, employment, unemployment, that is the non-farm payroll, economic balance, trade balance, and the market perception of future growth of one currency against another. In the future, if the market is anticipating now, for the moment, if the market is anticipating that the dollar is not doing much, then it has to be depreciated. If the market is anticipating now, if the Aussie is doing good from this point, then possibly it will go up. In the opposite way, if we see dollar, it will possibly go down from here, October. Dollar is going down with the head and shoulder and break of this neckline since 13th of February. Make sense?
Yep.
And this is a yearly support. As you can see, this is yearly support now. For the time being, they have become resistance because price has crossed yesterday, day before yesterday. So these are all now red, but we don't know what can happen. We either it will continue to go down, or can you tell me what can happen?
We could bounce back up as well.
Can be crack and snap back. Can do a crack and snap back. Yeah.
Yep.
If it is doing a crack and if it is doing, now the 88.6 is gone. Now 88. We'll be learning the Fibonacci in a big way in Forex. As we speak. What happening? What is happening?
It's going back up.
Crack and snap back. Yeah.
Yep.
Crack and snap back. If you see this bar and this bar exactly same, if you see the crack and snap back on this bar and this bar, tomorrow morning this bar will close maybe above this or maybe above this. So that means there can be a strength coming up because the US dollar is falling a lot from the head here. And if you go to the head to this one here, it has fallen 11.58%, which is a big fall. Big fall. In foreign exchange, dollar will be extremely critical about US dollar. It will be extremely critical about the US dollar because US dollar drives the market. Okay.
Yep.
Any question?
Nope.
All right. You do the demo trading or what you are doing, and you do the study of the basics of trading, and then be acquainted with Forex Factory and trading economics. And then I'll talk to you in your next class.
Actually, I do have a question, Parker, before we go. Your success or NP Financial's success or general performance, have we fared better or do we fare better with your students, with your class, with yourself in Forex or shares?
To be honest with you, 90% people have started in last 10 years. or 15 years in Forex. So 90% people would be trading Forex, and out of that 90%, maybe 30-40% people would be doing shares. So we are not really comparing apple with apple. So maybe a mango with apple. So but at the same time, I always say 1 in 10 or maximum 2 in 10 would be successful in Forex. 1 in 10 or 2 in 10 would be successful in shares. If when you have already proven to yourself till the third stage, that is learning, practicing, you have learned a lot, you have practiced a lot, which is very good, and you have backtested a lot, which is very good. Now you are doing demo trading. So you have passed 1, 2, 3. Now in the share trading, you have to pass then fourth phase, which is demo trading, and which you have started in live trading. Same thing you have to do in Forex, because the asset classes are different and our strategies are different. You will be getting more opportunity in Forex compared to shares. So so it is very difficult to answer that question, but I believe shares is a little bit easier than Forex. That is what I can say.
Okay. And you said, 10 or 20% are successful in shares and Forex. Is that 10 or 20% of the market, or 10 to 20% of the NP Financial students?
10 or 20% of the market.
Okay.
NP Financial will be a little bit more because they fight with their own self, own greed and fear. That is what they kill themselves. Nothing to do with anything else. Our guarantees will give you everything. Your thing is you need to do. And I think support has requested you to write a review if you are happy with us.
Yes.
All right, please write a review and then post it in Google and Trustpilot, and then I'll talk to you in your next class. Okay.
All right. Thanks, brother.
Take care. Bye for now.